Good morning, everyone, and happy Thursday. Looking at some of the craziest stocks this morning, of course, we have Tesla, which is doing very well off of their most recent earnings report. The stock closed around $977 yesterday, and right now the stock is at around $1,081. So it's up around $100 in pre-market. The stock's booming, and a lot of people are talking about it. So it's going to be an interesting day.
Yeah, it's going to be very interesting. And as we know, those earnings came across last night, and Tesla had some great reports here. You know, they have 81% year over year growth on their revenue. And man, they reported great delivery numbers that were up 68% year over year and other stuff like that. So their numbers came in well above expectations, which I'm really happy to see. They even beat on EPS. So overall, Mike, Tesla had a great report here. It's moving nice to the upside. And hopefully this is a good foreshadow of what's to come for some of these big tech stocks. Because after Netflix's drop, obviously investors were pretty worried, and it's pretty good to see Tesla coming in with these type of numbers.
Absolutely. And then we also can't forget about all of these airlines, Tom. Like, check out United Airlines and American Airlines. They are both booming to the upside this morning. They're up around 9%. The airline industry is rebounding from a couple years of a lot of pain. So it's nice to see these stocks finally on the uptrend. I feel like for a long time, we haven't really talked about them a ton just because of how their industry overall has been struggling so much. But now it looks like that is slowly changing.
It is. You know, we saw that nice report from CNBC a couple weeks ago, too, where they pretty much said that all airlines are expecting an increase in bookings and also just an increase in travel as the summer starts to ramp up and people start going on vacation more and traveling around and stuff like that. And I know these airlines are also liking that COVID is kind of ending, and you know, the CDC just ended mask mandates like a couple days ago. So that's huge for these airlines, obviously, and hopefully they continue up with this nice movement, Mike. Actually, intraday here, it looks like AAL is having some pretty nice moves. It almost hit 22 in pre-market, and it's kind of consolidating right on that $21 support from yesterday and after hours.
All right, there we go. So we're definitely having a lot of great movement this morning. Of course, we talked about all these airlines. We talked about Tesla. But looking at my watch list, it looks like the growth stocks aren't doing too bad, Tom. We have stocks like Zoom, Square, AI, Teladoc, looking pretty good today, so that's good after the horrible day that they had yesterday.
Yeah, I was about to say they need to ramp it up because look at Square today. It's doing great, obviously, so far, but you know, we're only up, you know, very slightly in the range of yesterday. Like, we opened yesterday around like 126 and just fell off the table. So if we could pop back maybe up above like 120 today or something, I'd really like that type of movement out of Square and other growth stocks. But you're right, it's good to see him coming back up today. I know Zoom was having a pretty nice candle at open, and you know, they're almost up to that opening price of yesterday. So maybe we'll see some of these stocks recover back. Mike, it seems like these stocks are up and down a ton lately. Like Zoom had a very nice day yesterday, or I should say a very nice day on Tuesday, exploded up, and then yesterday all these growth stocks gave all of their gains back, and it was pretty crazy to see them, you know, move that far to the downside right after that big explosive day on Tuesday.
For sure. Yeah, so it's good to see there. We have Tony saying, how do you feel about Roblox, Mike and Tom? So I am mixed on it. Like, I like it, but I don't love it. I just like other stocks more. I do have some cash secured puts on Roblox, so, you know, that is a bullish position. But I just like other stocks more. Like if I don't even know, Tom. Like, let's say in a hypothetical example where, you know, I had to manage a portfolio of, let's say, $10,000. I don't know if Roblox would be in there, and if it was, it would probably have a small weighting. With that being said, that does not mean it's bad at all. Roblox is growing at a crazy rate. They have a ton of metaverse potential, and they're just in an industry that's growing so much. So, and the stock's not at a bad level. So, it's really not a bad play. Like I said, I do have some bullish positions on it.
Yeah, I think it'll be pretty cool for the metaverse whenever that starts to get more implemented over the next couple of years, obviously. Roblox is a pretty big company. You know, I was really surprised to see their monthly user numbers whenever we were looking at those, Mike. They were up in the 100 million. So it was pretty insane to see them be that high. And You know, if you have numbers that are that astronomically high for monthly active users and stuff, you would think that Roblox would continue to do okay. Now, obviously, that doesn't always translate into their stock price, but I will say, Mike, like they've been pretty hyped up lately, and I know that even people like Nancy Pelosi have been making positions with them. So definitely interesting down here as it kind of straddles this $36 support. Like you said, it's not my favorite either, but I will say though, it's definitely a stock to keep on the radar with everything they do with the metaverse.
Tom, can you pull up Roblox on the dashboard really quickly? Because I didn't even realize this, but their fundamentals from the, I guess you could say from like an overview, they look pretty dang good. So check this out. Now, they have a price to sales ratio of 11.3, which is high. Okay, that is a high price to sales ratio, but it's okay to justify high price to sales ratios when your revenue grows at insane rates. And Roblox's revenue is doing exactly that. So over like the past, like from like 2018 to 2021, their revenue went from 312 million to almost 2 billion. That's in 4 years, Tom. And like even if we look at like from 2020 to 2021, Roblox went from 923 million to 1.9 billion. So it's like their revenue growth is very, very good. On top of that, they're a growth stock with positive free cash flow and operating cash flow. So that's a really good sign to see. Like I said, the revenue is constantly growing. It appears that they were buying back some shares too. So that's very rare to see from a growth stock, and it's a great thing. Their debt's not too bad either. So honestly, I'm pleasantly surprised. On top of that, Tom, you beat me to it. Their gross margins are pretty dang good, 74%. Jeez, I mean that's a lot. So
yeah, that is very good.
Geez, so I will say, like, I am pleasantly surprised by these Roblox fundamentals, and they're good. You know, the only major critique I have from like initially looking at it is the very high price to sales ratio. But then again, when your revenue's doubling, that's okay.
Yeah, it really is. I mean, look at the way this revenue's been moving here. And, you know, even if we go down to revenue on like a quarterly standpoint here, let's go ahead and look at that. Here it is in blue. You can see even quarterly, this has been flying up even to end 2021. So we've been seeing some insane growth out of Roblox, Mike. And I'm wondering when it will start to plateau and start to slow down. But for right now, quarterly, we're continuing to see this type of amazing growth. And hopefully 2022 has the same type of growth that 2021 had. Like you said, that was staggering to see them go over 100% on that revenue there. I don't think we'll see 100% rise in 2022 with their revenue, but hopefully it's something around 50% at least.
Yeah, we'll see. All right, good stuff there. And then we have Sean saying, can someone explain to me how I'm down on my Tesla call? I use options profit calculator and I should be up. Is it because of the IV crush? He said, like I should have $800 in profit, but instead I'm in the red. I'm confused. So, yeah, we can definitely take a look at this for you. Just let us know strike expiration, and if you want to, let us know your price paid, and we can definitely take a look at it. My first thoughts is that it would be the IV crush, and because while Tesla is up 10%, let me just double check on the chain. It appears that that move was definitely, I mean, not fully priced in, but it fell well within the range. So we'll see, but just let us know the details of that option, and we can definitely give you a more specific answer.
Yeah, that'll be interesting to hear because, man, these IV crushes have been insane lately after these earnings reports. And, you know, Tesla was doing very well. So I'll be really curious to hear the strike and expiration and everything like that because, as we know, Mike, I saw yesterday there were some pretty big moves on some of these options. So, like, if I go to Tesla's options chain here, I know that, like, obviously the market wasn't expecting anything crazy, but, you know, some of these calls are doing pretty well today. I'm not saying that they're all necessarily up, Mike, and they're not up a lot, but a lot of the weeklies are at least up like 15% if you got around the money.
Yeah, for sure. For sure. Yeah, and then Jerry said 10% was priced in. Jeez. Yeah, it's kind of crazy to say that. I mean, technically a little bit less than 10% was priced in, so Tesla technically beat a little bit on the expectations in terms of like expected movement from the options chain if we're being technical. But even if you beat expectations from the market makers and then the IV tanks and there's a day left in the option, that can definitely cause the option to fall. So, oh, Tom, you know what? I feel like this is a good time to bring it up that yesterday we saw something very, very rare with Tesla options where Tesla's... Okay, this is actually really crazy, guys. So, the whole conversation's logged in SM Chat if you're a Stat Modeling member. So, if you want to, feel free to go back from yesterday when we were talking about this. But Tesla stock was at its low of day. Like, literally, it was like breaking lows. And then Tesla put options were obviously at the high of day, but also Tesla out of the money call options were also breaking their high of day. So, like, it was just crazy to see because you almost never see a stock at its low of day breaking lower and at the same time seeing the calls break out. So look at Tom beat me to it. Look at Tesla stock tanking, the IV explodes up, and then in the picture above this one, we can see a price of the 1200 strike calls. So basically it just goes to show you that, you know, you can have a stock that's tanking down, it's down 4% and the calls can be up, and that's if, well, it just has to do with implied volatility.
Yeah, and those were the 1,200 calls, Mike, really far out of the money, too. So it was really interesting to see those call options moving up like that, especially when that stock was down. But you're right. Look at that IV. I mean, the way the IV was running up ahead of earnings yesterday was insane. Like, the market was really pricing in some volatility there. So, I mean, that was just nuts to see that type of rise, Mike. Honestly, Mike, it exploded so much that I feel kind of bad for anybody who bought options at the end of the day. I'm sure that was they were paying a pretty hefty premium there.
Yeah, you're paying a very hefty premium for a call that's $200 out of the money and that expires in 2 days. Gosh. So, yeah. All right, so it looks like Sean got an answer. So we had the 1250 calls for April 29, so looks like it was even further out of the money. So 1250 calls, April 29th, bought for 200. So let's see. I just want to pull it up really quickly. So 1250 calls. Yeah, it's the main problem is because they were so far out of the money and that they expire tomorrow. So let me just... Oh, no, they expire next week. Sorry. He said April 29th. Well, Sean, it looks like those calls are up now. So if you bought it for 200, those calls are currently at $260. So maybe if you were wondering why the option didn't go up right at market open, that can be a different question. So let's see. Yeah, I mean, because there was a lot of chop at market open, but IV falling like it is and the relatively short expiration will definitely play a role in this, but technically you are up on it.
Yeah, it's looking pretty hot actually so far. You know, it's up all the way up to 257, 260, so you're doing pretty well on the option right now. I will say though, Mike, at open, look at the way that this call option was moving. Like, the call option had prints all the way up at like 390, 350 and areas like that, and it fell all the way down to 118 with that IV crush. So it looks like that IV crush definitely played a big role there this morning, but hey, it roared right back up for you, and it looks like Tesla's stock right now, Mike, is actually doing quite well. You know, it's actually starting to get back up to that high around 1092, and who knows, maybe we'll hit 1100 by the end of the day.
Yeah, we'll see. You know, it's tough trading out of the money options with earnings. You know, it's a very, very risky thing. So keep that in mind. But I'm glad that you were able to take profit, Sean. That's awesome. Tom, looking at some other movers this morning, what are you seeing?
Yeah, you know, I've been watching these airlines still. They're still holding up pretty well. Looks like they're starting to turn back to the upside. Like, AAL is starting to try to point itself back up here. Looks like Delta is starting to really do well. Ran all the way up to 45.50. So some of these airlines are breaking out while some are just staying a little bit stagnant. But hey, I'll take the movement. You know, Delta's having a pretty nice move today, at least since market open. Even stocks like ChargePoint, Mike, are coming back up. Like we said, a lot of these growth plays are doing well today, even though they kind of had a terrible day yesterday. You know, it seemed like a lot of these poor growth plays were just getting destroyed yesterday, but they're getting some renewed momentum here. So maybe this will hold up. But, you know, just like we said after the day they exploded, you know, we kind of expected a nice continuation there, but then they gave back all those gains. So it's just been so choppy lately. And I will say, Mike, one thing that we need to keep on the radar is that Powell is still actually speaking later today. So it looks like he's going to be speaking at 11 a.m. Eastern time here. So he'll be speaking in about like an hour and 15 minutes or so. Then he's going to be speaking again at 1 p.m. Eastern time. So the 11 a.m. speech is not really even a speech. He's just giving welcoming remarks via a pre-recorded video. But at 1 p.m. Eastern, he is actually talking at like the International Monetary Fund debate. So that's going to be pretty big, Mike. And I know he might mention the economy here. So we might have to keep an eye on Powell later.
Yeah, we'll see. All right. So, Tom, we have a couple questions. We have Jerry and Caleb wondering what our stance is on Tesla. So, my stance is a little bit... It definitely disagrees with most people, but I'm going to say it anyways because that's how I feel. While I love Tesla as a company, while I think Elon has done amazing things for Tesla and all of his other companies, Tesla just has too much of a premium attached to it, and it's not worth the risk at its current valuation. Tesla is a $1 trillion company trading with a price to earnings ratio of 221. Like, that is insane. Now, I will be fair that the most recent PE ratio does not account for this most recent earnings report, but even so, their PE ratio is ridiculous. On top of that, they're a car company trading at a price to sales ratio of 20. They have gross margins of 25.28%, and I can understand that, yes, they can grow over time, but it's not like they're going to have gross margins of 50%. So they're just trading at way too high of a premium. It's one thing to have Ford's price to sales ratio is 0.47 with a PE ratio of 3.6. Even if you went to like GM, Tom, we could see GM has a price to sales ratio of 0.48, PE ratio of 6.4, you can say. And then Tesla's out here trading at a PE ratio of 221. And I understand that Tesla is a lot different than Ford and GM, but that doesn't mean that you just pay any price for it. And like I said, I love Tesla as a company. I think Elon has done amazing things for Tesla. But no matter how much you love a company, whether it's Tesla, Zoom, the company I love, DraftKings, Apple, anything like that, it depends on the price you pay. For example, let's say you love, let's say you love Chewy, Tom, like CHWY. This is a random example, so take it with a grain of salt, everyone. If you love Chewy, would you pay $1 for this company? Absolutely, because you would get your return on investment back. But would you pay $8 trillion? No, it depends on the valuation you pay. I know that's a very, very extreme example, but it goes to show that you can love a company, the company can be growing, their profits can be expected to increase, and their revenue can be expected to increase, but if you pay an absurd valuation, it doesn't really matter how much the company grows if you're just overpaying so much for it. The only reason I don't get like a put debit spread on Tesla right now is because of Elon. He's unpredictable and he's a beast, he knows what he's doing. And he's not someone I want to bet against, but at the same time, I'm not gonna pay a $1 trillion valuation for Tesla at this point in time. Like, I'm sure Tesla's revenue and profit will eventually get to the point where a $1,100 price on Tesla stock makes sense at some point in the future. But if that's 3, 4, 5, 6 years down the line, why buy it today if I'm just paying the future price for Tesla stock today? It's like, I guess some people would call it dead money. It's like there's relatively capped upside potential in terms of stock price. Not Tesla fundamental performance, but Tesla stock price. And it's just not worth the risk for me right now. And I know a lot of people are going to disagree with that. But then again, unfortunately, most people lose money when it comes to investing. So it's not necessarily a bad thing to disagree with the crowd.
Yeah, and whenever I look at Tesla's chart, Mike, they've been proving people wrong over the past 5 or 6 years with those numbers too. Like, their price to sales ratio has been really high, even whenever they were at $600 a share and everything like that. Those numbers were high, and the stock just continues to go up. So if it keeps having the hype and they keep coming out with new products, the stock price will probably keep going up and keep proving, the fundamentals wrong. But, at some point, it'll probably catch up with you, like Tesla might go up here. It might get some hype if they start announcing their truck is starting to ramp up production for next year and stuff like that. Then maybe we'll see Tesla's stock price break above 1,200 and move up to 1,400 or something like that. But still, though, like Mike said, is it worth the risk? And let's be honest here. Let's go ahead and get some nice percentages. So if Tesla rose from where we are now at 1,091 up to 1,400, that would be a nice 27% increase with Tesla, which that's awesome, and everything. 27% is a pretty nice move. But if we do go to a stock like Chewy, Mike, like you said, you're buying it on a great support down here at $40. And let's see how high Chewy has to go up to make 27%. So Chewy only has to go up and retest the $50 support, and it's already up almost 27% if it goes up to $51. So, there's a lot of movement that can be, or a lot of money that can be made with some of these lower price stocks as well. Like Mike said, that's going to be very risky up there with Tesla. He was definitely hitting it pretty hard there. But I will say, Tesla, it's really overpriced. It's hard to buy it up here. Mike, would you have been more of a buyer down here at $800, or are you just saying in general right now Tesla's too high for you?
No, I would not even have bought at 800, Tom. If I did a full fundamental analysis, this is gonna sound ridiculous, but the buy level literally might be at $250 or something like that. It's just
Well, I know it's never easy to buy things at the levels that they're supposed to be at. So here, let's here, I'll play devil's advocate. Let's say Tesla's here at $400. I'm sure that they still had a crazy price to sales ratio, and
right.
They were even having less sales and stuff at the time. So honestly, they were probably doing worse at this time. But whenever we look at this, obviously, it's hard to say well, I wouldn't have bought Tesla there because then Tesla flew from 400 up to $1,200. So I don't know, I feel like Tesla's just one of those stocks that keeps proving people wrong. And if they come out with something, exponentially innovative or something like that, then I think kind of like how they've been talking about some of these new robots that can clean your house and stuff like that. I'm not sure how much that's actually going to come to fruition, but still though, you know what I mean, Mike? It seems like Tesla just keeps proving people wrong.
Yeah, and you're right in that sense. Tesla, in terms of the company Tesla, it's great. Elon is
well, even the stock's been great. The stock has been proving people wrong.
Yes.
So what I'm trying to ask is there a chance that Tesla could still prove you wrong and go up to 1,400 or 1,500 if they do come out with some innovative stuff just based on hype? Because it seems like that's what their stock lives on.
Oh, absolutely. There's definitely a chance of that. And so I think some giant investor said this in the past, but it's in the short term, stock prices move off of news, but in the long term, they will eventually go to their real long-term value, So Tesla can do anything in the short term, but that just, in my opinion, does not justify paying a ridiculous valuation for it. You know what I mean? And then Hunter just said Tesla price of sales is higher now than it was at 100 and 400. So that's crazy to even think about. But it's a great company, but I just can't overpay for it. You know what I mean? Like I said with Chewy is a random example. It's every company in the stock market and everything you will ever buy, it's like a balance of, is it worth the price paid? So whether you're looking at Chewy or Tesla or a car or a house, it's is this asset worth the price? And in terms of investing, whether it's in the stock market, real estate, or investing in businesses, it's you have to look at the returns that are being brought in, and it's just Tesla is just trading at such an aggressive price to sales ratio and price to earnings ratio and every other metric that it just doesn't make sense, So, like I said, eventually their fundamentals will come back and their stock price will be justified. But today's not that day. So it's why would I buy something that has fundamentally very, very low upside reward and a ton of downside potential, like we saw with Netflix. Like, this is a perfect example. Let's check out Netflix chart really quickly. I think this is going to be pretty similar to Tesla, to be honest. So can we go to like a max weekly? Because I just want to showcase the long. Perfect. So we can see Netflix was a powerhouse. It went from, what was that, Tom? Like $50? Like, you could say like $50 up to $700 over the course of a couple years, right? It was a powerhouse. Everyone was just loving the growth and all that stuff. And then the second Netflix said, oh, our growth is starting to slow down. And this was before they even went negative subscribers. When they just said, hey, we're going to grow less than we thought we were, the stock went from 700 down to like 400. It lost like almost half of its value. So right when that growth slows down, it just changes everything. So it's like, what happens when at some point in the future, Tesla has slower growth than expected? Is it going to drop down 30% like Netflix? You know what I mean? So it's just like, you can't justify paying ridiculous valuations over the long term. Like, yeah, it can work in the short term, but it's like, you can't just overpay for things and go about doing that. You know what I mean? So for that reason, like, I'm just kind of diverging from the crowd with this one, and it's not worth the current price, in my opinion.
Yeah, and I'm not someone that likes Tesla too much up here. Like, I'm definitely not a buyer. I'm not into it at all. So if that says anything, but like I said, I was just trying to play devil's advocate there, because I'm sure there's a lot of people out there that are going to say, well, hey, Kathy Wood says Tesla's going to hit 5,000 a share. Or, like you see all these analysts out here with these crazy expectations for it. And man, it's crazy to see how it keeps going up too. Like, I never expected Tesla to go back on this second uptrend here. And I was kind of expecting them to have some negative numbers on earnings, but they kind of surprised me. They came out with good production, good vehicle numbers. They also increased exponentially year over year. So I don't know, it seems like they're coming out with good numbers, but obviously they're still overvalued. So I'm not buying it up here. I just was trying to play devil's advocate, like I said. So I hope nobody takes what I said and then they're like, well, I'm buying Tesla because Tom liked it, because I definitely don't. It's way overvalued, and I'm more of a buyer of Zoom down here, DraftKings down here, PayPal down here, stocks like that. I love these types of stocks that are down here by supports right now. I don't like buying when stocks are high. I might have bought Tesla on that dip if it was like at $800 or so, like if I could go back and do it. But, right now, I don't think I'd make the buy up here around 1,100 either, Mike. That's way too overvalued. And, like you mentioned, they only need one bad piece of news to come out and they'll start dipping back down. Like, who knows? Maybe their Shanghai factory will get shut down for a couple more months with COVID, and that's all they need to maybe get that downwards momentum going. But either way, it's way overvalued. And even if we look at some of these other EV companies, like Lucid and Rivian, they've been falling off the board, Mike, coming back at least closer to somewhat of a good valuation. So even with the drop, though, some of these are really high. And honestly, Mike, like, even if Tesla kept dropping, like, let's say Tesla, like you said, even if they were at 800, they would still be overvalued. So they're just so astronomically high right now. It's insane. And, they're at $1,200, and we can't forget they even split a year or two ago.
True that. And then just one last thing I wanted to say related to Tesla is this goes for Tesla, but it also goes for many other aspects of the financial markets, whether it's the real estate market, whether it's with cryptocurrencies, NFTs, stocks, anything. Keep in mind that, especially in the stock market and I guess you could say like cryptos and stuff, most people lose, right? And understand that the crowd is normally wrong. So when I see everyone out there saying Tesla's a great buy, that further tells me that, you know what? Tesla is overvalued. Like in March 2020, April 2020, and May of 2020, all you saw, Tom, were articles on CNBC and Forbes and all this saying the U.S. is headed for the worst depression it's ever seen. The stock market's never going to recover. All this bad stuff, right? Like, when just find out what the crowd's doing and do the opposite. So whether we're looking at the overall stock market or we're looking at individual stocks, if the crowd has a very strong opinion on something, keep in mind that most of the time the crowd's wrong.
It
So
seems like that happens so often, Mike. And even like whenever Powell speaks, we see, like it seems like the overall crowd will be like, yeah, the market's going to crash. We're raising rates. And then Powell will speak and the market will like rip right back to the upside and different stuff will happen like that with Tesla. So I definitely see what you mean there with the crowd because it seems like the market tries to go against whatever the majority wants.
yeah, exactly. And Tesla's a good company, but Tesla, the company, is different than Tesla, the stock. Elon has done amazing things for Tesla, and I'm sure Tesla's going to do nothing but improve and grow and do great things, but it still does not justify overpaying for it. So, shout out.
It could still always keep going up, right?
Yeah, of course. Absolutely. So yeah, we'll see. Shout out to who asked that? Oh, Jerry asked that. So shout out to Jerry for asking about Tesla. It definitely brought up a nice conversation on the stream. What else do we have going? It looks like Sean has a question about selling put options. He said, just for clarification, selling put options is betting on the stock to not go down and collect a premium at expiration, and vice versa for selling calls, right? Yes. Yeah, I mean, I would say yes overall. The only, exception to that would be if you want to get assigned shares. For example, Tom beat me to it again. He knew what I was going to say. Let's say you're looking at Zoom and the stock price is at, 105. And, normally when you sell put options, it'll go out of the money. So, you would go lower than 105. So, you might sell the 100 strike put, maybe the 95 strike put, something like that. But let's say you sold, let's say you went in the money because you were really bullish on Zoom. You might sell, the 120 strike put, and you don't really care if the stock goes down too much because you just know you're going to buy 100 shares at $120. But for doing that, you would get paid a premium of, $1,800. So it's for the most part, when you sell a put option, you want the stock to go up or go sideways. Another thing is, let's say Zoom's at 105 and you sell the 100 strike put. Basically, you just don't want Zoom below 100 because then you have to buy 100 shares at $100. So it's you don't care if it goes down. It can go down to $100 and 2 cents if you want to, and you'll still make the same amount of money as if Zoom went to $800. So it's basically you want the stock to go up. In terms of selling call options, I will say that it is normally more risky to sell call options because of the theoretical unlimited risk. On top of that, most brokers won't even let you sell call options unless you have a ton of collateral to protect yourself. But basically, let's say you sold the 150 call on Zoom, you just don't want Zoom above 150.
Yeah, and if they're covered calls, that's a little bit different, though. It might it'll obviously be a little bit different if they are covered, but I don't know if he meant if they were covered or not. But
right.
Yeah, either way, though, Zoom is definitely looking pretty good here, Mike, for a position like that. And kind of like you said, there is other ways to play it. You could also maybe do a 5 contract strategy with Zoom or something to where maybe you sell the 120 put and then you sell the 110 put and then you sell the 100 put and then the 90 and then the 80. And then you might get assigned on a couple of those, but then collect the premium on others and, stuff like that. So it's also trying to catch it as low as it can because if Zoom keeps going down, then you'll also get averaged in a little bit more. I like to do that sometimes, Mike, where I spread out the strikes like that a little bit, but that's pretty much all I do with cash secured puts. I don't get too fancy with them, to be honest, because they're pretty easy. Like you said, Mike, if the stock keeps going up, you just collect that premium, easy, said and done. Your hands are free, and then if you get the shares, then great. You're into Zoom at for the long term here. You're getting it at a great support level. So yeah, it's a pretty easy strategy, and I hope that answered your question. But yeah, there is ways to kind of play those strikes there.
Oh, absolutely. So yeah, great information there, Tom. Kathy said, "Why do you think Facebook is still falling?" Well, I saw that they did have a downgrade or a lower price target. Besides that, I haven't heard too much recent major news. They fell a ton with Netflix earnings yesterday, which you would think is investors selling off in anticipation of Facebook's earnings. Because if Facebook also, like Facebook was kind of warning of slowing active users and user growth and all that stuff in the previous quarter. So you wonder, like, if Facebook lost, if they lost on their estimates for active users for this next quarter, you would think that they would tank down like Netflix. But maybe it's priced in now. But that's the only thing I can even think of, considering that we did not see a significant like news article to go along with it.
Yeah, it seems kind of like another sympathy play. And what sucks is that Facebook had that big drop to the downside on that last earnings report. And Netflix also had that big drop before this one too. So I know that doesn't really coincide with anything at all, but it's definitely interesting to see these big tech stocks continue lower. The good news with Facebook is that they have a pretty big support coming up around like 186 or like 185. So that looks pretty good. Maybe we'll end up holding up on that if Facebook does fall. But we're going to have those earnings next week, Mike. Here, let's actually bring up the monthly earnings calendar. So we can see here, it's next week on Wednesday, the 27th, Facebook's going to be reporting. They're going to be reporting on a day with PayPal, Ford, Boeing, Qualcomm, Spotify, Teladoc, and even more stocks. So that's pretty big. Wednesday's going to be big. But as we know, Mike, next week's going to be big in general with Apple, Amazon, Microsoft, Google. So it's going to be a big week. But yeah, Facebook's reporting on Wednesday, and hopefully they don't report as big of a slowdown, Mike, because you're right. I mean, it's definitely getting scary here when you see stocks like Netflix falling another 30% after that other big drop. So, I really hope that they report good numbers. And, like you said, their monthly active users and stuff were starting to slow down last time, and their guidance wasn't the best. So hopefully they have some good numbers here. The main thing I'm going to look at, Mike, is that ad revenue, because I know last time Apple changed their privacy changes or they had some privacy changes, and it kind of made Facebook lose out on that ad revenue. And then I think Google was even changing their policy too, which could end up hurting Facebook even more. So I'm not sure how they're going to do with those with these challenges that lay ahead, but hopefully they surprise investors, Mike, because like we said, the market likes to go against the majority, and who knows, if the majority starts thinking Facebook will drop, maybe they'll surprise us.
Very true. Yeah, we'll see. It's definitely going to be an interesting earnings report with Facebook, and it's kind of even crazy to think about this, but Facebook is trading at the same level that it was trading at back in like April 2020. So that was like before the major uptrend. No, that was like right when the major uptrend started. So it's interesting, Tom. We have a lot of stocks at good levels, and I feel like we're going to look back at this time period like five years from now and be like, man, that was such a great opportunity.
Oh, I think so too. Like we're gonna see all these stocks at lows, and even big stocks. Like it's not every day we see Netflix down over 50% from highs. Same thing with Facebook. We don't usually see this type of movement out of these big players. So I'm with you. We'll probably look back and wish we would have bought more, but hey, all we can do now is buy as much as we can. And there's a lot of stocks, even besides these bigger plays. There's other stocks like the airlines. They're ripping up, Mike, but they've been at great levels for the past few months too. Like they were just dipping pretty big here. Like Delta was at $30. Now it's all the way back up to 45 just a couple weeks later. So it just takes a couple weeks of good movement to go back up. And Mike, we brought up those charts yesterday. If you miss the 20 best days in the market, it's really hard to gain. So, definitely time in the market's better than timing the market.
No doubt. All right. And then we have Mike saying, hey, Mike and Tom, do you see Tesla keep going up? What are some of the levels to look out for? So we'll look at it, Tesla, for like short-term, like momentum, day trading type ways, not like a fundamental way that we've been looking at it for most of the stream. But Tom, what are you seeing with these technicals? I saw Tesla was looking great just 10 minutes ago, but it looks like it's reversing.
Yeah, so as far as the technicals go, Tesla had a great day, obviously. They've been popping off support, and they've been flying back to the upside off this earnings report. But as we've been going up, we've been slowly approaching some big resistance levels. So as we start to look here on Facebook, we recently got really close to 1100. We hit 1092, which is pretty high. You know, that's pretty close to $1,100. So there's a big resistance there around 1,100. There's another big one up here, Mike, around 1,150. So as Tesla starts to go up, it's looking pretty good. You know, it's holding support and it's breaking out. But I will say intraday, it's a little bit overextended. As we can see, it's starting to pull back down a little bit. Looks like we're going to try to retest like 1060 here, which we tested a little bit after market open. So maybe Tesla will hold up here at 1060. But personally, Mike, I think we might see a bit of a pullback. You know, the earnings did go well, but at the same time, the stock is still up 9%. And, you know, so far today, it's been really choppy since the market opened. Most of this movement was after hours and pre-market. So ever since the market opened, it's just been really choppy.
Alrighty. And then we have, let's see. We have George saying, hating to see Enphase these last few days, earnings next week. Yeah, it's been pretty tough. I hope that they do well on their earnings report. I like Enphase for the long term, but, you know, that's the long term. You know, like even if their earnings reports has a bad reaction to it, I'm still going to hold Enphase for the long term. But yeah, it's definitely been rough over like the past couple days.
Yeah, I haven't even brought up the daily chart yet, but these past 2 days have been brutal, Mike. 198 down to 170. But I will say, Enphase was holding up so well that even if we look on the daily, I bet they're still pretty high off their recent lows. So let's check it out. So yeah, the recent low, Mike, was down here around like 120, maybe like 119, you could say. And we're still at like 170. So we're still up quite a bit actually on Enphase. And I will say, Mike, Enphase had a pretty nice move. You know, we went pretty much straight up, like I said, from 120 all the way up to highs of like 220. So this stock had a great move there for a couple months. I'm not too surprised to see it pulling back a little bit. To me, this just seems like normal price action. And, you know, like you said, for the longer term, I think it's still setting up just fine.
Yeah. And that's interesting, though. Like, you have a good point where, like, Enphase is still pretty high relative to its recent lows. For example, when everything was going really bad in, like, February, Enphase had a low of like 120, and right now it's at 170, where if you look at like Facebook or like anything else, basically, they're much closer to those recent lows, like even Zoom and Square and stuff like that. So Enphase has been holding up definitely better than most other stocks, but hopefully we see a nice earnings report.
Yeah, I hope we see some good earnings out of these like solar companies. You know, like Enphase should hopefully do pretty well. They did very well on that last report, Mike, and then they gave all those gains back. Let's go back and check out that last report because, yeah, here it was. So Enphase reported, you can see in after hours, they flew up in an amazing way. And then over those next couple weeks, they gave all those gains back before finally exploding again. So, yeah, I mean, hopefully they report good numbers, Mike, and hopefully it holds up better than last time if they do report good numbers because that was pretty crazy to see him fall back down like that. But yeah, Enphase, another good solar stock is Fslr. They're another one, like if you look on the daily, they're still holding up pretty well. So, you know, it's cool to see these solar plays holding up, Mike. It seems like they've been doing better than some of the other growth plays, although, you know, they are starting to come back down, like we said. So they could get a lot closer to stocks like Facebook and stocks like that pretty soon.
All right, there we go. Check out DAL really quickly on the daily chart. So this thing's been exploding, which is awesome. I was just snooping around on the options chain, and the 45 calls that expire next week, over like the past week or two, they went from $5 up to $165. So it just goes to show you some of the crazy movement we're seeing with these airlines.
Yeah, these are nuts, Mike. And I know that they're set to have a pretty good summer. They've been reporting great booking numbers and stuff like that. So great to see these stocks moving up. I know United reported this morning and they had a nice gap up on the chart. What I really like, Mike, is a lot of these airlines are starting to break out. Like United had a pretty big resistance around $50. It's now breaking that. There's another resistance here around 52.50 and then another one coming up around 55. But, you know, it's nice to see them breaking out of that. Delta is starting to come up and retest / break up here around $46. You know, it looks like that was the high of day today, right around there. So we'll have to see if Delta can break out or not. But man, a lot of these airlines are running up. They're at some pretty good levels, and I'm really happy to see them doing well because, like Mike, like I don't know about you, but I remember last summer I was kind of expecting the airlines to start to go back up as COVID went away. But as we know, the Omicron variant and all that other stuff started coming into play, and those airlines just continued to stay stagnant. But now it seems like the CDC's lifting the mandates off the airlines, and they're starting to roar back to life. So who knows? Maybe this is where we'll finally see the airlines start to go up. And they're talking about reporting increased traveling and stuff like that with consumers. So seems like they're set to do pretty well here this summer.
All right, there we go. And then we have Caleb mentioning CVS and Alibaba. So CVS is not really moving too much today. It's a powerhouse company. Its max chart is pretty dang good. They pay a decent dividend. They're getting really close to their 2015 high of around $113.65. I don't really have a bias on CVS for the short term. For the long term, I expect them to do just fine. They're like a slow-moving value stock. Their implied volatility is only 29%, which is kind of low. So basically what this means is we're not going to see a ton of day-to-day movement. It would be typical to see CVS up or down 0.3%, where with other volatile stocks with Tesla, Roblox, Zoom, stuff like that, we normally see larger moves. So long term, I like CVS, but short term, I don't really have too much of a bias.
Yeah, yesterday CVS exploded. I kind of remembered this from yesterday's video at night. I remember CVS was leading my watch list all day yesterday, but they were doing quite well. And today they gave the gains back. It doesn't look like a grade A setup to me intraday right now. So I'm kind of with Mike. I don't think it's going to do anything crazy today. But if we look at it on that daily chart, Mike, it's been consolidating a lot lately around here up at these highs. And I'm curious to see what'll happen because they've done very well ever since COVID. They've been flying to the upside, and obviously their numbers have been looking pretty good. So as I look at CVS here, if they start breaking out maybe up above 110 or that all-time high around a 111, they might get some more momentum. They might keep going up. But for the shorter term, I'm just going to kind of eye them up because like you said, Mike, it's kind of in the middle of the range here on the daily, and I'm just not expecting anything crazy in the shorter term until those earnings come out, maybe it looks like they're coming out on May 4th.
All right, there we go. And then we have Alibaba too. So Alibaba's been falling a ton in the short term and over the past couple months. It has been brutal. There are some unique risks with this company. If you are okay with those risks, Alibaba is at a good level. As long as they're not lying about their numbers, they're at a really good level. But then again, it's if you think they might be lying, then you have to price that in, and you have to pay a lower price for the stock in order to take that risk in a calculated way. So like I said, if you believe the numbers, they're at a really good level for the long term. Short term, it's been brutal, but it all depends on if you believe them.
Yeah, I know that lately China, those stocks, Mike, have been insane. How we've seen reports of some stocks or some companies lying on their reports, and then you have the government trying to infiltrate and not infiltrate per se, but obviously meddle in what their stocks are doing, how DD had to be delisted pretty much because of everything that was going on. Did they ever get delisted, Mike? Let's see. No, it looks like they're actually still on the market, but I know DD had a lot of talks of delistment there for a while, and as we know, China, they just like to meddle in a whole bunch of stuff. So I don't know, Mike. It's tough to say with Baba because of that risk with China, but like you said, if you like the risk, they're at a great level here, and they've been at a good discount for a while now. And Charlie Munger's been buying in around $120 or so, and it seems like some big players have been getting in too. So I don't know, Mike. It's a very tough play here. Like you said, I think it's at a great level, but for me, it's so tough to play it because of the risk with China. Personally, I don't think our relations with China will get too bad because I think both countries rely on each other too much, but that doesn't mean that China won't be negative towards some stocks. And I really hope that in Baba's case, it goes better. Remember, Mike, even just a year or two ago, the CEO of Baba, Jack Ma, remember he like went missing for a few days and China had to put out like a whole bunch of statements about it. Remember that?
Yeah, I do.
Like I'll never forget that. The CEO went missing for like a month and everybody was like, "What's going on?" But he
Yeah.
ended up coming back. But man, it was a pretty crazy thing and they just like to put their hands in so many different places and I just don't even know like what to think with China because if they start attacking Taiwan, then it's like game over for these stocks.
Yeah, that's true. And that's definitely a valid risk, so we will see what happens. And then we have Johnny Leverage saying thoughts on Roblox and Unity supports. So let's see. Tom, it looks like Roblox is at a pretty major support right now.
Yeah, it is. It's around $35 and it's actually on the daily making like a new low here over the past year, which is insane to see. Let's go to like that max daily chart. Maybe it's a little closer. Yeah, no, it's making a new low here, Mike. So pretty insane to see with Roblox, new lows. And, as I will say though, it seems like they're at a good support, but at the same time, just keep in mind, they're at a new low. So this could get a little bit accelerated. They might end up going down to 35 even or something like that. So always keep that in mind that now that they're breaking down, they might go a little bit lower. So I'm not sure it's the best buying opportunity here, Mike, but I will say it's breaking lower and it sucks to see because I was kind of hoping Roblox would double bottom down there and maybe start to go up. But now that they're breaking lower, it's getting a little scary.
Yeah. So where was their major support that they just broke below? Because I know that they're at like a new low right now, and I did see like a giant support right around is that like 36, Tom, or 35.50? I see.
Yeah, so 35.50 is going to be the major level to look at here. You can't tell on the daily chart because it happened in pre-market one day, so it's not going to show up on the daily, but as we can see here, it's getting really close to 35.50. We're only 10 cents off of that. If we do break that, it's going to be tough. Roblox might keep going lower, but that's a big support there. Like you said, Mike, 35.50. There's another big support that we recently just blasted below at $40. So if we do end up going back up, $40 will probably be a nice resistance, but man, 35.50, I really hope that holds up, Mike, and now we're only like 5 cents away from that. Looks like Roblox just keeps going lower by the minute.
Yeah. So 35.50 is the main level, and we're basically at that right now. So there we go. We also have to check out Unity. Let's see. Unity. Yeah, that one's slowly fading lower too, Tom. What are you seeing with supports?
So with Unity, I'm seeing a big support with them down here around $80. There's another big one around 73 to 75 as well. But as we can see here, $80 has held up a little bit better in the past. So I think 80 will be huge today. We're still $3 away from that. And personally, Mike, the way it's turning over, I could see Unity hitting 80 today, or at least maybe like close to it, like 81. But, that's a pretty bad setup today, Mike. The chart's turning over and all these growth plays are starting to move back to the downside. So I wouldn't be surprised if Unity tried to retest 80. Like I said, there is another one around 73 to 75 too, but I think 80 is the main level. And if we look at Unity on like a daily chart, you can see 80 even held up like way back in like last May actually.
Yeah. All right, good stuff. And then let's see. I know Troy mentioned UAL. We covered that one a lot today so far. It's booming up. There's a lot of momentum with that whole industry. At the same time, we have Alex saying thoughts on Airbnb for long-term shares given travel is coming back more. So I would initially think that it is running up considering the airlines are, but it's not really running up too much. I would think it'd be good, but honestly, I would just have to do like a full-on fundamental analysis to determine whether or not it is at a good level right now. Let me just pull up the dashboard on it really quickly, just so we can get an overview. So let's see, Airbnb, price to sales of 17. Holy jeez. All right.
Now we're not buying it.
Yeah. Okay. So price to sales of 17.
Oh, the net profit's even in the negative here.
But here, I mean, actually, like their gross margins are actually pretty good. That's 80%, which is actually really good. So, I mean, it's not too bad. I mean, their revenue, obviously, like their revenue dipped off significantly in 2020, but that's because the world was shut down, obviously. So, Like, if we look from 2017 to 2019, their revenue went from 2.5 billion for Airbnb. From 2017 to 2019, their revenue went from 2.5 billion up to 4.8 billion. So it's like that's pretty strong revenue growth. In 2021, their revenue was 6 billion. So I wonder what it will look like for this year. I mean, I'll say this, like, if Airbnb continues to grow their revenue like this, and if they can get their net profit margin closer to their gross profit margin, that would be amazing. I just don't know how realistic that is. I mean, their free cash flow and operating cash flow were positive in 2021, so that's really good. What else? I mean, like, honestly, my main concern with this one is just the price to sales ratio. But then again, I mean, their gross margins are 80% and their revenue is growing a lot. So it's actually not horrible. And this is just like a quick overview with Airbnb. So obviously, like, we would have to look a lot more into it. But it's not like terrible.
It's not terrible, but that price of sales is still pretty high. I remember earlier we were talking about Tesla, and they're not too far off of Tesla's price of sales, to be honest. So, it seems like, like if, for example, if Tesla's overvalued, wouldn't you say then that Airbnb is like technically overvalued too? Or
I see what you're saying, but there are some exceptions to this. For example, like, different industries have different acceptable levels of price to sales ratios. For example, if we look at the car companies like Ford and GM, we can see that Ford and GM have a price to sales ratio of around 0.47 to 0.475. This is because the auto industry has relatively low margins, because there's just so much that goes into, building and selling cars, whether it be all of their employees, all their factories, and all that stuff, right? There's just a lot that goes into the industry they're in. While on the other hand, it is more acceptable to have high price to sales ratios with tech companies, because oftentimes their margins are higher. So for example, we can see with GM, they have a gross margin of 14%, while with Airbnb, they have a gross margin of 80%. So it's like their business itself, like it's Airbnb on paper is a more profitable business, quote unquote profitable business. Like, even though that, their net margins are not positive yet, their gross margins are significantly higher than General Motors or Ford's gross margin. So that's why it's easier to justify a higher price to sales ratio. So I definitely see what you mean, but while looking at price to sales ratios, it's very, very, very important to look at the company's profit margin, revenue growth, and price to sales ratios of other companies within their industry to determine whether or not the company is overvalued or undervalued when looking at price to sales.
Yeah, it's tough because, like, there's not too many other companies out there really like Airbnb either, which is insane. Like, they're kind of in I know that they're in like the hotel sector or kind of like the travel industry, but I don't know, like, how would you even classify Airbnb, Mike? Like, they're so unique, I think. Like, obviously they're so much different than like a regular hotel company too. Like, it's pretty crazy to even try to find stocks that compare to them, to be honest.
Yeah, I do agree with that, because it's not like you're going to compare Airbnb to like Hilton or like Wynn or the Hyatt. You know what I mean? So,
even look, Hyatt even has a negative net profit margin. So maybe this makes Airbnb's case even stronger.
So yeah, this is interesting. So check this out. Hyatt has a gross margin of 14%. Like, that's pretty. That goes to show you Airbnb definitely can justify a higher price to sales. So it's interesting because, like you said, Tom, it's hard to find like a good comparison to Airbnb. Like, I initially was considering like looking at Vrbo, and that's owned by Expedia, which is EXPE, and that can work. But the problem is that Expedia owns a lot of other things besides Vrbo. So it's tough, but all in all, Alex, great question. Airbnb's not bad. They're trading at a relatively aggressive valuation, but then again, it's like, if their revenue continues to grow the way it is and they get their net profit margins higher, it's fine. Like, if their revenue continues to explode like this and they can get close to those get somewhat close to their gross margins of 80%. Like, that's insane. So it's really not too bad.
Yeah, and I like their business structure too. Like the way that they allow people to like rent out their houses for people to use as Airbnbs and stuff. I think that's a really cool way that they have a business structure. So I personally like it, Mike. And their recent high, they ran all the way up to like 200 or 212 here at the high. Now they're trading at like 166. You could pick them up for like a nice like 20% discount, just about like 22%. So that's pretty good, Mike. It's trading pretty far off of its high, and it's like right in the middle of the range. Like as far as like technicals go, you're not buying it at like an amazing support. Like you're not getting it down here at like 140 or anything like that. But I will say like you're getting it in the middle of the range, which isn't too bad. And like Mike said, if they hold up and their numbers keep going well, especially like how the airlines are expected to increase bookings and they're expecting more travel this year, who knows? Airbnb might do quite well.
True that. Alrighty. So great question, Alex. And then we have DCM saying, Mike, what do you think about Twitter making a run back to 49 with all this Musk news? It's definitely possible. Musk seems like he really wants Twitter, and I hope he gets it. I heard he was set to make a tender offer. I know there was a bunch of news that came in the popular news tab today with this. I'm trying to read it. It says, Elon Musk says margin loans to finance proposed Twitter deal is subjected to conditions tied to Musk shares in Tesla. What else? There was other news too. Elon Musk is seeking to negotiate a definitive agreement for the acquisition of Twitter. Elon Musk is prepared to begin such negotiations immediately. So there's that. He filed an amendment. Okay, Twitter rises. So let's see. I mean, it looks like that was the news today, Tom. It's definitely possible. DCM 49 is pretty realistic considering Twitter is only at 47 right now, and just a couple days ago it was at like 54. So it's definitely possible if the deal goes through. Like if Musk can find a way to do something to gain control of Twitter, I would definitely expect their shares to be higher than 49 depending on the deal. I guess the main risk is if you don't think Musk will be able to buy Twitter. Like, because if he can't and he sells off his position or does whatever, that would probably make the share price tank. But all in all, I can see a run back to 49 with the Musk news.
Yeah, as long as the news stays steady. Like Mike said, though, if Musk sells his shares and if he says, I can't buy Twitter or something, if something like that comes out, expect a big crash. I'm not saying it's going to totally crash, but I mean, we've been seeing Facebook and Netflix and stocks like that go down 30% with weird earnings and stuff. And I think that this would definitely make for an accelerated sell-off if Musk ended up selling out. But I really think, Mike, he's going to try to buy it. He's been pretty serious with it, I think. And, a lot of people have speculated that he's just doing this for attention. But personally, I don't. I think he's really going to try to get it if he can. He might not be able to, but I think that he's going to try. And looking at the stock here, Mike, it's been actually consolidating this week quite well. So, obviously it had a lot of hype last week with that news coming out. So far this week, it hasn't really done too much. But I will say, like, looking at it on the daily, it is consolidating a lot down here. And Mike, it looks like one of those nice like stair step type of patterns that you see to the upside sometimes. So if $45 ends up holding up here as a good support, I think we might see Twitter end up, having a pretty nice move to the upside. And I think it'll be a pretty good shorter term play if we do start to see a nice breakout here, maybe up above like $50. Obviously 50 is a pretty big resistance. So if we break that, who knows? I think Twitter could maybe go on a pretty good run here. Like you said, Mike, this is a pretty crazy circumstance. People aren't talking about buying big social media companies like this to make them better. Musk is definitely a big player in the stock market, and he knows how to move stocks. So hopefully he moves Twitter the way he wants to.
Yep. All right, Tom. Well, do you have any last-minute thoughts before we close out?
Yeah, I mean, hopefully Tesla does well along with Twitter. They're doing pretty well, pretty good today. They're holding up. They did fall off a little bit at open, but they're holding up at the at that support down here around like 1,050. You could say like 1,052 as well is a pretty good support. But yeah, they're holding up well. Tesla's doing great along with the airlines and cruise lines. So hopefully we see this nice movement continue today. Even Microsoft had a pretty nice day. So I'll take it, Mike. I know a lot of the growth plays are in the red, which is unfortunate, but I'll just try to forget those for today.
Yeah, right. Hopefully they come up soon, Tom. It's been brutal.
Yeah, DraftKings all the way down to 15.12 again. Like, man, like this thing just keeps going lower. Let's look at this on the daily. We're almost back down to that all-time low, Mike, around $14.97, like right around $15. So it's definitely getting brutal. It's not just DraftKings, though. Square's making these types of moves. Same thing with Palantir. Same thing with PayPal. You name it. If it's a growth stock, it's probably down here around its low. So definitely getting scary in the short term, Mike. Hopefully we keep seeing some nice earnings. As we get to earnings season, it looks like a lot of these stocks report soon, like PayPal, Palantir, stocks like that. And if they do well, maybe these stocks will start to get boost back to the upside. But as we've seen with Netflix, if they go negative, it's going to go negative in a bad way. So hopefully the numbers come out better than expected.
All right, there we go. So thank you guys so much for joining today's stream. Before we close out, I just want to personally thank each and every one of you who joined. So thank you, Hunter, George, J Deep, Tony, Raymond, Lewis, Sean, Vicky, Jerry, Caleb, Square, Sean, Kathy, Mike, Johnny, Troy, Alex, DCM, and Couch Potato. We really appreciate you guys joining. We have a great time on these streams, and hopefully the market pops up today because it was a pretty brutal day yesterday. But besides that, thank you guys for watching, and have a great rest of your day.